Adrienne, always a pleasure to get some of your insights around Nike and perhaps just on headline. You look at the report, you hear from the executives on the call last night. I just wonder, broad strokes, what jumps out to you the most?
So broad strokes, what jumps out is this was largely expected, not in the consensus numbers, but one could assume that a lot of the numbers that came out, particularly on the fiscal 24 annualized guide, were roughly in line with sort of buy-side expectations. So we knew that, the stock since last quarter had underperformed the S&P grossly. It was down about 12% since they last printed. So the notion that there was something wrong in wholesale, the notion that Macy's and DBI were making announcements about kind of recapturing, wholesale business, those were all very well known. In fact, Nike had in their past quarter had already sort of signaled that there was going to be a moderation. And by moderation, that means slightly negative in that wholesale channel. Remember, the past 3 consecutive quarters, they've been restocking, aggressively restocking. What that means is that you're shipping those items. And when you ship them, you book them as revenue. If people have them earlier and they've restocked for a longer period of time, say 6 to 9 months, then they don't need to buy them in subsequent quarters. That's really the big piece of it. The second big piece and bigger piece for the long-term investor really is this China recapture. So China went from a 1% constant currency growth last quarter down from 5%, right, the prior quarter with all this disruption, to an up 25% constant currency. If they can hold on to that double-digit growth rate through the rest of the year, it's very possible they recapture or start to head back and recapture some of that $1 billion, right, that they've lost since the PR announcement a couple of years ago.
Hey, Adrienne, it's Julie. It's good to see you. One of the other things that sort of caught our eye or our ear, I guess, from the call is the strength in Jordans, which were up in the mid-30 percentage rate across men's, women's, and kids, according to Donahoe. How do they keep doing so well in that brand? I mean, listen, you've covered retail for a long time. It's really difficult to have a blockbuster brand or offering with endurance. How has this managed to do it?
So brands that endure, they are not about the style of the moment, not at all. They're about the emotion, right? They evoke emotion and passion for the brand, be it Lulu or Nike itself or Jordan. So the consumer comes in, they put on a pair of Jordans, they think they can jump, 10 feet high.
I can.
You can, exactly. I've seen you. But that's what you want. You want people to put on the footwear, put on the apparel, and feel like $1 million or feel like they can go conquer the world. That's an enduring brand. And that's what Jordan is putting forth into the marketplace.
Do you believe
they also have great product, great innovation, but behind that is the emotion.
It sounds like you own a couple retro pairs of Jordans yourself, Adrienne. All that considered, does that make this brand of Jordan within Nike perhaps any type of economic indicator for the consumer environment more broadly?
What I would say is in any economic downturn, any recession, it's the 80-20 rule, right? Well, I should say the first thing is that an ebbing tide, everybody kind of goes down a little bit, right? The best brands, if they were going to put up upside, they're putting up in line, right? The worst brands are going to start missing. So an ebbing tide and a slowing economic environment definitely impacts people all around, but it impacts them at very, very different levels. And so then you get to the 80-20 rule. Within any economic recession, there are 20% of the brands that have that halo, or it's their brand moment, right? It's the cycle time for them. And so to the extent that there's a few of these brands, Jordan included, I mentioned a couple others, there are absolutely going to be those brands that continue to perform and actually accelerate and sort of beat the general kind of malaise in the economy.
So, Adrienne, I know you're an overweight on the stock, so it sounds like you didn't hear anything in this report that would change your view that people should be buying this.
So there are 3 things that I would say. If you're contemplating buying this. So the stock's it's trading off about 2% in the pre-market, so let's call it around 110. We are looking at numbers have come down, right? The implied EPS is somewhere in the 370 range on a fiscal basis. Calendar next year is going to run in about the $4 range. And this stock, in its worst of days, traded down to a 21 PE multiple. So let's just say that somewhere between 22 and 25 PE multiple Downside, you're looking at $90. Kind of if you're kind of a medium downside's about 10% from here. If you're in the mood to kind of like dollar cost average and get into this name for fiscal 24, or I should say calendar 24 and beyond, then you should do so. The three things that I care about coming out of this print: number one, wholesale, right? That overhang, well, it's known, right? We were all worried about it. Okay, now they finally said it, right? It's going to be down mid-single digit for fiscal 24. Number two, we were worried that China was only going to be up 10%. That's not that sexy. It was up 25%. Okay, so that's, from a long-term investor, that's a good data point. And then the third piece of it is just, the Q1 guide, right? Really, it was 30% lower. And that's, I think, what really kind of is pressuring the stock, and it's kind of down 2%. That was a surprise. But the fact of the matter is you have wholesale coming down at the same time that they need to spur demand and invest in demand creation. And so you kind of have this kind of weird moment in the first half of the year where you're not getting your freight recapture, your promo recapture, your China accretion, right? Accretive margin. Those are all coming. So those are the three things that I would consider. About 10% downside from here. And I think you're okay. I mean, Nike is still one of the best brands. At some point, they'll come out of this wholesale cycle.
Adrienne, while we have you, I mean, you've covered Nike for a long time and seen consumer responses to marketing messages and campaigns. You've got some companies out there that are in the throes of controversy because of their wavering on commitment to social issues. For Nike, this was a company that went out very early on with Colin Kaepernick and stood by their messages and the marketing, and also what their commitments look like on the spending front and donating and philanthropic efforts as well. Is this a case of how a company could get their commitment to social issues right, and how the stock can also benefit?
What I would say, each of those issues that you mentioned had a near-term impact, and sometimes they were good and sometimes they were bad, right? I mean, the PR issue, was I don't want to bring it back up, but that was not a great one. What it says to me is that the company has a very, very firm moral grounding, and that there are some places where they're not willing to get pushed on, and that their commitment to a lot of these ESG initiatives is unrelenting. And so what I would say is, even in the near term, these are the types of things that these are the companies need. The largest companies in the world need to stand for the right things. And if you do that over the long term, over a compounded period of time, you will win, right? So to the extent that they're doing the right thing, operating the business correctly, and what we've always said, that this generation, millennials and Gen Z, and those to come after them, are much more sensitive about spending their dollars as a vote of confidence in what that company is actually doing from a moral standpoint, as well as from a product standpoint. So you can get the hot brands with, a good corporate kind of messaging. I think you win in the long term.
Adrienne, always great to get your perspective. Appreciate your time this morning.
Happy 4th.
Happy 4th to you.
Happy barbecue. I'm coming over.
Okay, well, look, and we have the same color on. We're ready to go. We're ready to be patriotic together. Adrienne Yih, Barclays Consumer Discretionary Analyst. Appreciate it.